What does financial freedom mean to you? And how does passive income play a role in achieving it? Imagine a life where your income isn't tied to the hours you work. Instead, money flows into your bank account, even when you're sleeping, traveling, or simply enjoying a good book. That's the power of passive income. This video aims to embark you on an exciting journey where we'll explore 7 passive income ideas that could potentially generate $10,000 per week. Yes, you heard it right, $10,000 every single week. We're talking about opportunities that can help you break free from the 9-to-5 grind and take control of your financial future. These ideas are not about quick fixes or get-rich-quick schemes. They're about building sustainable income streams over time. So are you ready to take the first step towards financial independence? Stick around as we unravel the secrets of passive income. Before diving into the 7 ideas, let's clarify what passive income really means. Picture this. You're earning money while you sleep, travel, or spend time with loved ones. That's the charm of passive income. It's a steady flow of earnings you receive with little to no ongoing effort. Now don't get confused. It doesn't mean there's no work involved. Indeed, most passive income streams require substantial upfront effort or initial investment. But once set up, they can generate earnings with minimal oversight. Passive income holds significant value in achieving financial freedom. It allows you to diversify your income sources and create a safety net. Unlike active income, where you trade time for money, passive income can be earned round the clock, freeing up your time for other pursuits. It's like having a money-making machine that never sleeps. Now that we've established what passive income is, let's explore how to make it work for you. Not all passive income ideas are created equal. There are a few key factors to consider. The first of these is scalability. We're talking about how well an idea can grow, how quickly it can scale up, and how much potential it has to generate more income over time. Then there's sustainability. This is all about how long-term the idea is. Can it provide a steady stream of income for years or even decades to come? And finally, we need to consider the initial investment. This isn't just about the financial outlay, but also the time and effort you'll need to put in at the start to get things off the ground. Consider these 3 factors: scalability, sustainability, initial investment, as the 3 pillars of successful passive income. They're your compass, guiding you to opportunities that are not just profitable, but also sustainable and scalable. With these criteria in mind, let's delve into our first passive income idea: real estate investing. Real estate investing, it's a classic for a reason. Now, when you think of passive income, real estate investing likely comes to mind. It's been a reliable form of wealth accumulation for centuries. But how can it generate passive income? Well, there are several strategies. The first is through rental properties. This involves purchasing a property and renting it out to tenants. The rent you collect can cover the costs associated with owning the property, such as mortgage payments, property taxes, and maintenance, while also providing a steady stream of income. Then there's Airbnb rentals. This is a twist on the traditional rental property strategy, where instead of having long-term tenants, you rent out your property to travelers on a short-term basis. This can often generate higher income than traditional rentals, but it also comes with its own set of challenges, such as managing bookings and ensuring a high standard of hospitality. Another real estate strategy is through real estate crowdfunding platforms. These platforms allow you to invest in real estate without the need to directly own or manage properties. They pool together money from multiple investors to fund real estate projects, and in return, you get a share of the profits. Of course, with every investment, there's potential for return, but also risk. Real estate is no exception. Market fluctuations, property damage, and vacancy periods are just a few of the risks involved. But with careful planning and smart strategies, these risks can be mitigated. For instance, it's essential to thoroughly research any property before purchasing it. This includes understanding the local real estate market, assessing the condition of the property, and knowing your potential tenants. It's also beneficial to diversify your real estate investments. This could mean owning properties in different locations or investing in various types of properties such as residential, commercial, or industrial. Diversification can help protect against market volatility and ensure a more stable income stream. Real estate investing offers a tangible way to generate passive income, but it's not the only way. So let's continue exploring other avenues for creating wealth passively. Ever considered owning a piece of a company's success? That's what dividend investing is all about. Imagine this: you buy shares in a company. The company turns a profit and decides to share a portion of those profits with its shareholders. That share of the profit, my friends, is called a dividend. Now, the beauty of this is that you don't have to lift a finger, and yet your bank account grows. That's the allure of dividend investing. So, how do you get started? Well, the first step is to find companies that pay dividends. These are usually large, established corporations that have a track record of profitability. You'll find them in sectors such as utilities, consumer goods, and healthcare. But remember, not all profitable companies pay dividends. Some prefer to reinvest their profits back into the business. So, do your research. Once you've found some potential dividend-paying stocks, the next step is to diversify. Don't put all your eggs in one basket. Spread your investments across multiple sectors and companies. This strategy reduces the risk of a single company's poor performance affecting your overall returns. Now let's talk about the power of compounding. This is where things get really exciting. When you receive a dividend, you can choose to reinvest it by buying more shares. This means you'll earn dividends on your dividends. Over time, this can lead to exponential growth in your investment. It's like a snowball rolling downhill, gathering more snow and gaining momentum as it goes. But remember, like all investments, dividend investing comes with risks. The company could cut or eliminate its dividend. The stock price could fall. That's why it's crucial to do your homework, diversify your investments, and have a long-term perspective. Dividend investing allows you to earn while you sleep. Next, we venture into the digital realm. In the digital age, creating and selling your own digital products can be a goldmine. With the rise of online platforms and the global reach of the internet, your potential market is literally the world. But what exactly are digital products? Imagine you're an expert in a particular field, say gardening. You could create an ebook on how to grow the perfect roses, or perhaps an online course on organic gardening. These are digital products, resources that are informational, educational, or entertaining, and can be delivered electronically. And it's not just limited to ebooks or online courses. Software, mobile apps, digital art, music, podcasts, webinars. The list is endless. The beauty of digital products is that they're incredibly scalable. You create it once, and it can be sold an infinite number of times across the globe without any additional production cost. Now you might be thinking, sounds great, but I don't have any particular expertise. Well, the good news is you don't necessarily need to be an expert. For example, you could curate and compile information from various sources into an easy-to-understand guide, or perhaps you're good at graphic design and can create digital art or templates. The key to success lies in finding a niche that you're passionate about and that others are interested in as well. It's also important to remember that while creating the product might require a significant time investment up front, the potential for passive income is substantial. Moreover, the overhead costs are relatively low. You don't need a physical store or warehouse, just a platform to sell your product. Websites like Amazon, Etsy, and Udemy, or even your own website, can be great places to start. In summary, creating digital products offers an exciting opportunity to generate passive income. It allows you to leverage your skills, knowledge, or creativity, and the scalability and low overhead costs make it a highly attractive option. Digital products offer unlimited earning potential. Next, we'll look at a method that requires little to no startup cost: affiliate marketing. Affiliate marketing, a way to earn money by simply promoting the products or services you love. It's as straightforward as it sounds. You endorse a product, people purchase it through your unique referral link, and voila, you earn a commission for each sale. The beauty of affiliate marketing lies in its simplicity and flexibility. You can choose products that align with your interests or expertise, making it easier to authentically promote them. But remember, success in affiliate marketing doesn't come overnight. It requires strategic planning, consistent effort, and of course, patience. So how do you find the right affiliate programs? Look for ones that offer competitive commissions, have high-quality products, and provide excellent customer support. It's also crucial to understand your audience's needs and preferences to recommend products that they'll truly value. Affiliate marketing allows you to earn from others' products. But what if you could earn from others' needs? That's where peer-to-peer lending comes in. Peer-to-peer lending, a modern twist on a traditional concept. Imagine a world where you play bank, lending out your money to individuals or businesses in need. In return, you receive interest payments, creating a steady stream of passive income. This is the world of peer-to-peer lending. Now, it's not all roses and sunshine. Like any investment, peer-to-peer lending carries risks. Borrowers could default on their loans, and the platform itself could go under. However, there are ways to mitigate these risks. Diversification is key. Lending smaller amounts to a larger number of borrowers can help spread the risk. and careful research of the lending platform's financial stability can provide an extra layer of security. In the balance, the rewards can be substantial. With interest rates considerably higher than traditional savings accounts, peer-to-peer lending offers an attractive opportunity to grow your wealth passively. Peer-to-peer lending puts your money to work. Our next idea puts your savings to work. High-yield savings accounts. Turning your savings into earnings. That's the power of high-yield savings accounts. Now you might be wondering, how does a savings account generate passive income? The answer is simple: through interest payments. You see, when you deposit money into a high-yield savings account, the bank pays you interest on your balance. And while the interest rates might not be sky-high, they are significantly higher than those offered by regular savings accounts. But how do you choose the right high-yield savings account? You'll want to consider factors like the interest rate, the bank's reputation, and the ease of access to your funds. And remember, the goal is to maximize your returns. So don't let your money just sit there. Make regular deposits, avoid unnecessary withdrawals, and let the magic of compound interest do its work. High-yield savings accounts make your money work for you. Lastly, let's explore how you can earn from your idle assets. Your assets could be earning you money right now. Let's talk about rental income from equipment or assets. This is a strategy where you can take items you already own, such as vehicles, machinery, or even storage space, and rent them out to generate passive income. This concept is simple, yet effective. It's about making the most of what you already have and turning it into a revenue stream. However, like any income-generating venture, it requires careful consideration. You need to evaluate the demand for your assets, consider the costs of maintenance, and understand the potential risks involved. For instance, a car rental business might face challenges such as vehicle wear and tear or insurance liability. So it's not just about owning assets, but also about choosing the right ones to rent out. It's about understanding your market and preparing for potential challenges. Rental income from assets is another way to maximize your income. Now let's wrap up. We've covered a lot of ground today, exploring 7 different ways to earn passive income. We've seen how real estate investing can generate substantial returns, how dividend investing can harness the power of compounding, and how creating digital products can offer scalability and low overhead costs. We've explored affiliate marketing, a strategy for earning commissions by promoting products or services. We've delved into peer-to-peer lending, a method of earning income by lending money to individuals or businesses. We've also touched on high-yield savings accounts, a simple yet effective way to earn interest on your savings. Lastly, we've examined rental income from assets or equipment, an innovative approach to generating passive income. Each of these ideas holds the potential for financial freedom, but it's up to you to take the next step. Explore these opportunities, evaluate your options, and start building your multiple streams of passive income. Remember, the journey to financial freedom begins with a single step. Are you ready to take yours?